My name is Scott Jennings. I'm a contract trainer, and I'll be teaching this with John Sloat, who's in the back. He'll be probably taking over here in a little bit, and we'll be going through a lot of the data that he helped me prepare. He just flat out prepared, so that was a lot of help to me. Anyway, so you're here for bid unbalancing, why and how. We're going to show you how that works. We've started some new classes this UGM, trying to figure out if we can kind of mix in some business topics along with how to do that in heavy bid. So this one's a little different than some of the other classes. We'll be in heavy bid a lot, but this is meant to be a business education program as much as it is how to use the software. So let's go to the next slide, please. So bid unbalancing. Why do we do it? The first reason, if you could just advance, is cash is king, right? None of us are in this business to do it for free. And to the extent we can get cash from the owner as soon as possible, that is the goal. The second reason, same as the first. It's all about cash. You've all heard the expression, before you run out of cash and it's game over. So third reason, cash is still king, it's still the reason, but all joking aside, the other two reasons, or the main two reasons you do it, is the main reasons you'd want to take advantage of cash, or how you would do it is you would take advantage of it in a quantity discrepancy, which I'm sure John's going to go through with his data as far as if you know something's going to overrun or underrun, you want to take advantage of that with the client as much as you can and maximize your profit. The other reason you'll do unbalancing is to just move money around in the bid, preferably forward. So you'll know as you close out in these bids, a lot of times the upper items on the bid pricing screen are the ones that come up early. Always ideal to move as much cash up there as you can, and these are the tricks John's going to show you as far as moving money up in the bid to get cash in the door quicker. Everyone out there who's on a line of credit is working on Prime Plus 2, and we never get that back from the owner. I don't know if you guys bid cost of money on that add-on screen. Some people do, but it would be something to look into if cash is important to your company, and I'm sure that it is. So, next. This is a typical cash flow of just $1 million job. Put as many zeros on the end of that number as you want on the top. But the point of this, and the reason we're going to try these programs this UGM, is because I don't know about John's experience, but mine has certainly been that when I get out on site, there are a lot of contractors, owners who don't really know how some business things work, and they don't always know how they can use that in the program, and that's what we're here to show you. And so if you've never actually sat down and looked at an actual cash flow, this is what a lot of jobs will look like. And so working over from the left-hand side to the right, at -6, you're 6 months before the job actually starts. You're not really spending any money, but the big line here is the purple dotted one. The red line going down is money going out of the door from your office, and the green one going up to the top is money coming in the door into your office. The purple is just an addition of the two. The line in the middle that says zero line, that's when you're cash neutral. Notice you don't get cash neutral to the 16th month in the job where you actually make a profit, if you make a profit. And sometimes it's a measly 3.1% if you look at CFMA. You know, the Financial Management Association, who publishes these numbers for utility guys and publishes them for heavy civil guys, so the profits aren't always that great. A lot of people doing work out there in bulk, of course. But look at what's happening to you as you're going through the job. If you're not managing cash, or you don't take advantage of what you can with quantity discrepancies, and with the fact that some items, this bridge should go before that one, or demo this before you demo that. If you don't keep in mind, as you're actually setting all the bid prices and getting cash moved up in the job, you're going to suffer from this and have a negative cash flow for months -1 all the way through 15 on your 16-month job. Arrow again, please. So timing of expenses, things you should be thinking of is either a project manager as the estimator and how you run your company. Hopefully we have some owners or financial people in here as well. But timing of expenses, things to keep in mind and how important cash flow is in a business. Insurance. If you renew today, you're going to pay today for all the insurance you owe for the next 12 months. So someone's got to write a $250,000 check or a $100,000 check or whatever the check is today for the next year. Zurich or whomever will come back later and audit you, and then they'll give you money back or they won't. But that money is going out the door today for everything coming up in the next 12 months. Bond. First invoice on any job I ever got was the bond. I just signed the contract and I got my bonds back from the surety, and all of a sudden the bond invoice is in there, and they don't really care if you got paid or not. They want their premium. And that's due up front before you get paid. Labor is due weekly. You've got to cut checks. And taxes, your 940s and 941s, which is your unemployment tax and your payroll tax, all that is, I think all of it's paid on a weekly basis. At least the 940s are. So you're paying all that on a regular basis, and they don't care when you get your money. Accounts payable is due as soon as you get it, or net 30, whatever that is. Everyone knows what account payable is. Some fuel places, they charge you weekly. So you've got to cut a fuel charge weekly. Again, no one cares when you're going to get your money. Not the fuel guy, not the government, and not the surety. And then subcontractors, that's the only thing you control in that list really, is you can make that at best cash neutral, right? So you're going to get paid, or they're going to get paid when you get paid. So that's something you can actually manage a little bit. But if you want to keep fuel in your gear, you better pay them when they ask for the money, otherwise you're not operating. Next slide, please. Timing of payments, net 30 to 90, net 365. I exited my company about 2 years ago, and no more net 365 for me. It's down to more net 30s and things. It's quite a change to work for engineers who ask, do you mind if I just pay on Friday? You mean this Friday? So yeah, I certainly don't mind, and the cash flow is a lot different being over here wearing fancy sports jackets and going around and talking to people. Next. Tips on improving cash flow. Invoice aggressively. So when you send out that first progress payment request, the first thing you want to make sure you get is startup costs. Get the insurance, get the bond. If you moved in or moved people, if you have inventory sitting in your yard, pipe you're going to pull out of, get material on hand. Be thinking of how you can make your company cash positive, if possible, or at least to a cash neutral position. On interim invoices, be looking at project quantities. Bill your contract items to compensate for untimely change orders. You guys all know how it works, where, oh, I can't get a change order quick enough for that $250,000 extra you did for me when I asked you to drop everything and do it. Well, that favor can be repaid by getting paid forward on some quantities on your progress pay application that you haven't done yet. Keeping as-built is always one that always seemed to hold up my money forever. Kind of preaching to the choir here and telling what you know, but keep your as-built up, because a lot of times that's another tool for owners to actually come in and hold your money. On a final billing, contract may require that you actually ask for the final payment. I've had my final payment held up by the fact that, well, you never asked for it. Well, didn't you think I wanted it? You never asked, and that's what the contract says. So don't forget to ask when it's time, when you reach whatever level of completion is necessary to get your final payment. Estimate aggressively. Cost of money. Like I told you before, money costs prime plus 2. If you're tapping off a line of credit, whether it's $100,000 or 10 million, whatever size you are in the room here, you're paying prime plus 2, which is going to be 4 3/8 plus 2-ish, something like that. Call it 5, 6, 7%. That ain't cheap, and you guys aren't making that much money, because I see how much money you're putting on your jobs, and sometimes you make that much, sometimes you pay that much to do the job for the client. Additional bond costs. As you go through and you estimate change orders, make sure that you add additional bond costs when they add work on. Because you're going to get audited at the end of the year by the surety. He's going to come in and say, well, you said you're going to do 10 million this year, or 10 million on this job, you did 11. I want that last million at 1.5% or 1% or 0.5%, whatever it is. So be thinking about all those things as you go through change order. Pick up the bond, pick up the general liability, all those things that you're going to get audited on the end of the job, and someone back in the corporate office, unless you are a corporate office guy or gal, is going to have to cut a check.
If the bond is incidental to each respective pay item, it gets a little bit more convoluted when you're trying to get upfront money, especially if you're anticipating some overruns. And we've had that happen on a couple large jobs that were 150 million, ended up being 200 million. We moved the bond into a lump sum item. We were anticipating these overruns and didn't really foresee that happening, or didn't really look that far ahead. So the additional insurance cost that was incidental to those items, we bit the bullet on. So if your state has the bond and all your insurance and everything incidental to that item, it becomes a little bit more convoluted to try and get your money up front.
Next slide, please. So bid unbalancing and how. We want you to come out of the heavy bid portion of this class with understanding the difference between cost and price. There's a big difference between the cost which you do in estimate entry and the price you put on the stack of coins or poker chips, or I had some call it the Bitcoin button, whatever it is, that actual unit price button. That is your price to the client. The cost is back in estimate entry. Huge difference. Second bullet, understand how the pricing screen works. That's where John's going to come in and show you some of the gymnastics that he does when he closes bids as far as unbalancing the bid in our favor as contractors. Number 3, explore features that heavy bid has to help control spreads. It's a 4-hour class if you take it down in Houston, and we could probably sit up here and talk about it for 4 hours. You're going to get a 25-minute run-through probably on it here once we get into heavy bid. And the fourth one, examine examples of unbalancing and its effects on cash flow and profit, which is obviously why we're here and what I've been talking about here for the last few minutes. Next slide. Go ahead.
So we'll stay on this screen for a minute. When you're in a pricing screen, this Customize tab is a great tab, and we'll even look at a couple options of exporting out of this and doing a quick unbalancing report that we send out for different people to review. So basically, what this column in red here is that's your cost. That's what you've marked, what you've put into your estimate. Then when it figures up your markup, your insurance, and everything else that you have, that's that number. Then based on the method of measurement, basis payment, we have decided to put these numbers in here. So this is our revenue, this is our cost. So you can see on this side that based on our takeoff quantities, we're only anticipating a cost of $4,454,000. Whereas when we bid to bid quantities, now we're at $5,103,000. So we're projecting a budget of $600,000 into there of quantities that we do not believe exist. So how many people here are using takeoff and bid quantities? How many people have red and green on their screen when they're pricing? How many people here have submitted a bid where that net difference is a big negative number? Okay, so how many people here have manually moved activities into like a mobilization that you're anticipating a massive underrun? So what you're doing there is you're essentially tricking the system. And let's go into heavy bid. We'll walk through that a little bit. And very simply, I'm going to walk through and explain the simplicity of that screen and how it works. And it'll probably be enlightening for some of you. Go to Tools, Preferences, Estimate, Bid Summary and Pricing. So right here, this is the standard for HCSS. So there's 3 different methods. The first one is the standard, it's the most common, should be used on all unit price items, on mostly unit price contracts. So the way this works is it says, you work up your estimate, you come up with a number. Now I got that number, and I'm going to multiply it by the bid quantity. Then in the pricing screen, I'm going to keep track of what your billings would be on takeoff and what your billings would be on bid quantities if we hit bid quantities. This one here is essentially the same exact thing, except the summary screen is representing the bid quantities. So did you see how my takeoffs were 4.4, or the takeoffs, based on the way I was marking it up, I would only receive $4.4 million in revenue. Now that screen would show that 5.1. So if your owner is looking for your markups based on bid quantities, that's a nice screen. It shows the projected bond cost, the projected add-on cost that are all projecting in. The last one, that's has its special uses. We'll let that go to another time. Hit OK there. So let's go to the summary screen first.
We were whispering about the fact that you guys don't have this. So the SJ Unbalanced, the one that's up here, you guys don't have, and our apologies. Unfortunately, UGMB will have it. But so if you can just pay attention to the concepts at least that we go through.
Yeah, we apologize for this service, but unfortunately, this didn't make it into the initial databases when you got it loaded up. So if you're trying to follow along, you actually don't have this estimate. So that's an astute observation. But the PowerPoint presentation is very, very comprehensive. And I think rather than doing a follow along, more of this is comprehension, understanding how it works, and then taking it back. So here's our markup screen, right? 19.91%. That's our anticipated markups. So That's what we want on our cost. Can you flip to the pricing screen? So now takeoff is what we're anticipating to get paid for, right? So now that 19.91% right there is our target. So essentially what we've done is the bid is trying to say, if I take everything that you've worked up and then I multiply it by the bid quantities, it should be $5,237,000. But I'm trying to get paid 19.9% on the job. So that's the target. That number there, you're trying to match on the number on the summary screen. Now, so you say, okay, I think my takeoffs are right, but I'm not sure. Okay, this is what you're wagering. That $130,000 is the risk that you have out there if you hit bid quantities instead of your anticipated takeoffs with the way this is marked up. So, does everybody understand that? You know, it was never explained to me that clearly, and once you see that, so these numbers match. Basically, if you take all these numbers and just prorate them across and leave them in the pricing screen, these will match exactly. So now we have, on this bid, if you and I had the exact same estimate and you didn't move any money around, you would be $137,000 higher than me on bid day. And in fact, even though you were $137,000 higher than me, or $130,406 higher than me, in the end, if we both did the job and we both built out our quantities, we would make the exact same amount of money. But I'm $130,000 lower than you on bid day. So if you've ever submitted a bid and you're trying to take advantage of unbalancing and you don't have a negative here, basically you have artificially hid what your risk is from yourself. And to me, I know a lot of joint ventures we've done, big joint venture partners, and they say, I don't like to see that negative, so I just manually move it. And then we write it down on a plus minus sheet of what we're risking. I'm like, but the system does it all. Yeah, but I don't like to see that negative. You're just hiding from the risk. So here, it's right out in front of you, and everybody can see what it is. So let's say you have somebody that really understands this, and you've taken this to the next level, and you're really capitalizing on all this. Before we go into some of the advanced features, hit Customize. Take off everything that we don't typically see. Take off direct, indirect, add-on, take off all those totals. Take off status. Take off direct unit cost, balance unit cost. Give me bid, balance, bid difference on the right-hand side. Hit OK. Send that to Excel. Actually, sort by balance bid difference. Send that to Excel. Now, say you have 900 items. Delete any item or hide any item. So hide columns 5. Hang on one second. Hide columns 5 through 13. Just highlight those rows and hide them. There is a quick unbalancing report. Send it out to everybody that worked on the estimate or anybody that was involved in the review, and you say, this is where we've moved the money around. Does anybody have any concerns with how we've moved this around? And you wouldn't believe how a little conversation like this is said, the method of measurement and basis of payment on this I don't like. So I don't want to put all that money in there because they're not paying us for the excavation, the slope back on the foundation excavation. Cool, I agree with you. Let's bounce that back, let's put money somewhere else. So this is a tool that I use every job. We do about $1.2 billion worth of estimates with 5 estimators. We submit about 450 jobs a year. This is our practice on every job, every job. So basically what I did was I just gave you a summary of how it works. And that should be the most important thing that you take out of there. So let's mess with that a little bit, and then we'll get into some of the advanced features, Scott, of how we can have the computer help us with some of these things. You can close that. Now, when you have 900 items, a lot of them are almost right on the money. So you only have 10 at the bottom and 10 at the top that have negatives and pluses in them. So,
Anyone got any questions? I'm looking for hands. If you have one, just raise it.
now there's some tricks of the trade, right? If you're in New Jersey, I don't know why, but they can't get it through their head how much tack oil goes down. The contractors consistently lay 0.1 gallons per square yard, yet their factor is 0.5 every job. So everybody in the state of New Jersey pennies tack. So in that particular case, I actually move that money, and that way those dollars don't show up in that plus minus screen, because I know that's not a risk. If it's a if and where directed, or if it's a takeoff, you know, you're taking off a pile and you're doing estimated tip, that's big risk. Because I can tell you, no matter how many times I've taken off piles, and no matter how many times I've looked at blow counts, and no matter how many times I've gone out there and looked, the pile lengths have never come in what we've bid. Kind of close, but you know, looking at it. So you have to be discerning. There is a time when you actually want to move that cost, because I use that feature at the bottom of the estimate screen as a risk tool. That's what it is. So let's mess with this a little bit more. And these green ones here, go to the bid price screen, the first tab on this screen. So sort by the bid item column. We can go back to that. So I have this set up as a percent. So that we're locked in at that. So we get to capitalize on some things there. So here, the water main, can you scroll over bid item 4? So that's 16,000 over 12,000. So we're anticipating a 25% overrun there. Can you go to the concrete curb? It's item 10. So same thing, another 25% overrun. Let's, just for grins, let's take that bid price up to $60 a foot. Hit yes. So now we're $240,000 over what our actual bid would be when it takes our marked up, built up price and then projects it forward when it multiplies it by the bid quantity. So we say we don't want to do that. So let's scroll over item 3. So this is a pretty big item. So our cost is 30, we've bidded at 30, relatively low risk. And this has happened before. We went ahead and did a topo on a landfill. And they had done the topo before they did some preliminary excavation, and it was to this degree. So let's penny that item. Instead of a 30, we're just going to penny that.
0.01, yep.
And let's take clearing site up to $900,000. So go back to the summary screen. There's our magic number. Based on the markups that our owner has set, so let's just, for simplicity's sake, let's say that that number includes our overhead and profit. That's what we're targeting. And we're assuming that we have confidence in our takeoff quantity. So let's go back to the pricing screen. So if our takeoff is right, we're now going to make 1% more than we were anticipating, but we're almost $700,000 lower than the next place guy. I can't tell you how many jobs I've got calls from competitors and they're like, you guys are out of your mind. I said, I know it. There's no doubt. But this is how this works. Now, what are we risking at this point? If I'm wrong on these quantities and the bid quantities are actually right, we're going to go out there and do that job for 3.7% on cost. And from what we were originally anticipating, we're going to be missing $681,000, and that's your risk. It is such a simplistic screen, and it's fantastic. Now, there are a lot of things with spread overrides that help us balance this better. So if you have a lot of quantities that are underrunning, and you know they're going to underrun, there's no point in letting your MOB, letting your bond, letting your insurances, letting any of your add-ons project into them. Because now you're just inflating your bid that additional amount times the quantities that are never going to happen. So obviously this is a little extreme. And I don't know too many people. I've never submitted a bid like that had 15% difference. But there is a lot of this to take care of. And then, when we look at that unbalancing sheet, our summary sort number 3 has a risk value attached to it. So a lot of times, if we don't have the overall confidence that we're overly accurate on that, we'll assign that a high-level risk. So we'll sort by the high-level risk, and we'll see if there's any high-level risk items that we determine are severely unbalanced, and then we'll evaluate, hey, how much are we really gambling here? Like, could this go up to 40,000? So I think now that we have the basics of how this works, we're going to go in and we're going to look at some features in the summary screen that can help us along our way. So let's go to the summary screen. So let's go to the bond tab first. So anybody that has advanced or comprehensive has this feature, the bond item. So you can send that bond item to a lump sum price. Now, think about it, what you're doing. If every item on your bid is going to overrun, let it distribute to all those. So essentially, you'd be making more profit when it all overruns. So it not only is it the system, but it's a thought process that you have to walk through of what's going on with every one of these and the level of confidence that you have in there. So on a regular basis, there's not enough unbalancing on a job or not enough overruns that I typically ever risk my bond. So I like to put that in a nice safe item, and to Scott's point, put it in some place that you can get cash flow up front. No matter how solvent your company is, more cash is better. More cash equals lower bids. Anything over a year, we do a schedule on and then reference back into a cash flow chart, because our company's all about assets. We have the largest fleet in New Jersey. It's worth It's worth over $100 million. But we don't have a lot of cash in the bank, but we own most of our equipment. So cash flow is very important to us as far as that, because if we go negative on cash flow, then we have to start selling off equipment. So let's go to bond item real quick. And right under the selected bond table, let's send that to clearing site. Hit the save button. Spread that. So go back to bid pricing. That negative number actually went up another 8,000 because I had the bond projecting into all these items that were underrunning. So that gets a little complex, but it actually made you more competitive now by sending it to a lump sum item, since you were prorating the bond into all these items that were never going to happen. Go to the summary screen. Go to spread overrides. There's a lot of fancy-dancy stuff going on here, and you probably don't even notice it. Has anybody used this screen before? Okay. That's better than I was anticipating. This is a great screen. Great screen. So the way this works is, for indirects, this is an override. Whenever I check this box, it's saying override my indirect and use the value that I tell it in there. Down at the bottom is the value, the total value of that particular group of cost. So in this particular bid, we have no indirects in this bid. We've put everything in as an overhead percentage. But we do have $210,000 of add-on costs, which is general liability, and for whatever reason, the owner put, a contingency in there. So now, by checking these boxes, I said, even though I'm calculating that based on direct labor, and I'm telling you how to distribute it, I want you to not distribute it in the rules that totally ignore those items, and then take the remaining items that are left and distribute it in them. So now let's try and control this a little more. So let's check the box for water main under add-on bond to your right there. And then under the amount, put $100,000 in there. Okay, now look what happened when we did that process. I manually sent $100,000. So it said, okay, you've called out all these items already that you said put no cost to. Now you're telling me use a lump sum cost of $100,000. I'm trying to spread 210. There's a remaining 110. Now, since you haven't told me what to do with that remaining 110, I'm going to take the remaining unchecked items, 1, 2, 3, and distribute it to them based on the rules that you told me. So we're going to capitalize on a little more unbalancing. Check that concrete curb box on add-ons, tab. Did anybody take the shortcuts class Arthur taught? Please use that. Just a little side note. We were going through a review the other day, and a guy was changing out an excavator. And when he did it, we were going from a 330 up to a 350. So he deleted the excavator. Then he scrolled up to the double chevron, clicked that, and then he scrolled through the tree window, then he opened our equipment, which has the most intuitive code book structure you've ever seen. So if you've been around a piece of construction equipment a day in your life, you can find it pretty quick. Then he went and scrolled, opened up another tree, and then added the 350 in there. So I said, I want you to do that again, and I want you to switch back to the 330. So he did that. And while he was doing that, I timed him on my phone. It took him 27 seconds. If you learn those shortcut keys, I did it in 8. You know, so times that by 150 clicks. Has nothing to do with this class. Just when you're doing a review, when you're working, there's a lot of clicks. It makes a big, big difference. So let's put 100,000 in there. So now I have only $10,000 left. I forced 100 into the one, I forced 100 into the other. So let's go back to the totals. Run the spread. So we don't have to run the summary because we haven't made any cost adjustments. So now we're trying to get $750,000 in markup, and we have $3.8 million in cost. Then you add your add-ons, your bond. Here's your total cost, total markup, total desired bid. This is the total desired bid based on the takeoff quantities. This thing thinks you are exactimators and that all those quantities you put in are right on the money, and that's exactly what's going to be built out. So when you're doing this, it's hard to cut it right to that desired number unless you've built some contingency into your takeoff quantities. So my point there is if 35,000 yards is our rough number, but the engineer comes back and says, if there's any undercuts, it's paid under roadway excavation. I understand you took off 35,000. I understand that's what's actually out there. But when you get down to the bottom and there's some unstable subgrade, when you undercut it, I'm going to pay under that item. So go to the bid pricing screen. So here's our numbers now. And notice, because of those tricks that we played, now we're only wagering $677,000 because we lowered our bid without changing our projected revenues. This is the most powerful tool in HCSS. This, with the second you submit this bid, is when you make your money. And there's a lot of value in having a good estimate. But there is more value in having a great bid. So let's go to setup real quick, bid items. Scroll up to roadway excavation, 50,000 yards. So under the takeoff quantity of 35,000, we take off the entire subgrade area and we say, there's a high probability that we have to undercut 10% of this. 10% equals 5,000 yards. Let's update that takeoff quantity to 40,000. Hit yes. Hit yes. I don't know why it's doing that. What was that screen?
It's every activity in item 3.
When did that start?
Just now, with your excavation item.
No, when did they start having a pop-up screen for every activity?
Oh.
Is everyone used to that just popping up once? Yeah. I think that's a 2018 that they slipped in there on us.
I found a couple myself.
Because it pops up typically when you update the takeoff and it says, do you want to prorate the quantities in there? Go to estimate tree view real quick. Open up excavation. Open up site grading. Click on miscellaneous tab. miscellaneous tab in the, up in the activity information, the miscellaneous and activity information. So that factorable, if I had that checked, what that means is, does anybody use this factorable button? Great feature. That factorable means I've taken off 25,000 and it's not going to change no matter how many cubic yards I do. So when I updated it, it was 25,000 before I updated it. Even though I told it to ratio it in, it didn't update it. Great feature because there's so many activities that the method of measurement and basis of payment is only for 4 or 5 items. And then there's a few items in there that never will be factored. It's a kind of a hidden feature. And I see a lot of people when they update takeoff quantities, they hit no and then they go in and manually do it because there was one quantity in there they didn't want it to update, which is the site grading. So just wanted to show you that real quick, that by arbitrarily hitting yes, I didn't update everything. I was advanced enough that I let the computer do the work. Nope. Well, it didn't ask me because I told it not to factor it. It doesn't care if I put 1 in there or 10 million. It's going to be 25,000. So go to summary. Run the bid summary. Now go to bid pricing. So now look at our markup on cost. It went down because we pennied that item, and now we have to do another 5,000 yards at a penny. So when you put these takeoff quantities in there, you have to be thinking, you know, there's got to be a little room for contingency of things that could potentially happen. You don't want to be right down to the wire. So our particular company likes to build those quantities in, and then we keep a plus minus sheet of what are built-in quantities that we're anticipating either as scope growth in a design build or potential scope growth for change orders that would get paid under that item, or if and where directed quantities. So that this unbalancing game is not just about this screen. You know, it has a lot more to do with your experience and what you actually think is going to happen. So now we're only making 16.82%. So let's take that excavation up to $5. So now we're making 22%. And if I'm wrong, it's 9.65%. And the owner of our company is old school. And when he originally came in, he would see that number and they would get into total panic. And I went through the same process with him. And he says, this is the greatest thing ever. I don't have to worry about what if these quantities overrun. So he'll come in and he'll say, I want to hedge my bets a little bit. If I'm wrong, I only want to risk 5%. No problem, buddy. Take clearing site. Take clearing site up to $1,350,000. $1,200,000 even. Hit yes. So now I'm going to make an extra 10% if I'm right. And if I'm wrong, I'm only risking 3% from what I'm anticipating. So if you don't get anything else out of this, you know, just understanding this screen and using it as a tool, and some of these more advanced features will come later. The left side of, go into bid summary.
John.
Now there's
time.
What's that?
It's time.
It's time?
Yeah.
We ran out of time?
Yeah, turn around and ask them if they have any questions.
Anybody have any questions? No questions? I must be very thorough.
Thanks, everyone.